What is the balance of payments? The balance of payments, BOP, also known as the balance of international payments, is a statement of all transactions made between entities in one country and the rest of the world over a defined period, such as a quarter or a year. It summarizes all transactions that a country's individuals, companies, and government bodies complete with individuals, companies, and government bodies outside the country. The balance of payments includes both the current account and the capital account. The current account includes a nation's net trade in goods and services, its net earnings on cross-border investments, and its net transfer payments. The capital account consists of a nation's transactions in financial instruments and central bank reserves. The sum of all transactions recorded in the balance of payments should be zero. However, exchange rate fluctuations and differences in accounting practices may hinder this in practice. The balance of payments transactions consists of imports and exports of goods, services, and capital, as well as transfer payments, such as foreign aid and remittances. The balance of payments divides transactions into two accounts, the current account and the capital account. Sometimes the capital account is called the financial account, with a separate, usually very small, capital account listed separately. The current account includes transactions in goods, services, investment income, and current transfers. Balance of payments and international investment position data are critical in formulating national and international economic policy. Funds entering a country from a foreign source are booked as credit and recorded in the BOP, while outflows from a country are recorded as debits in the BOP. The current account. The current account is used to mark the inflow and outflow of goods and services into a country. Earnings on investments, both public and private, are also put into the current account. Within the current account are credits and debits on the trade of merchandise, which includes goods such as raw materials and manufactured goods that are bought, sold, or given away. When combined, goods and services together make up the country's balance of trade. The BOT is typically the biggest bulk of a country's balance of payments, as it makes up total imports and exports. If a country has a balance of trade deficit, it imports more than it exports, and if it has a balance of trade surplus, it exports more than it imports. Meanwhile, the capital account is where all international capital transfers are recorded. This refers to the acquisition or disposal of non-financial assets and non-produced assets, which are needed for production but have not been produced, like amine used for the extraction of diamonds. The bottom line. The balance of payments, BOP, is a method by which countries measure all international monetary transactions within a certain period. The financial account. In the financial account, international monetary flows related to investment in the business, real estate, bonds, and stocks are documented.